We're going to be able to get started first with that, and then after that, we'll go ahead and move from there. So I'm not a CPA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision about what you want to be able to do for Forex trading. I understand that Forex involves risk. It involves risk of being able to make money, also involves risk of being able to lose money, so please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it is not promised that you're going to end up making money today. So with that being said, show my face on the screen. Hopefully everybody's doing very well. As we go through, I'm trying to make sure everybody can be able to see me on Instagram and be able to get everything situated with that and be able to go from there. I can see myself on YouTube and I can see myself on Facebook. 7 o'clockers, I hope everybody's doing very well. Obviously, you know, because this is a early morning session, not that many people are up being able to look at what we're doing, but obviously you have this recording so you can be able to take a look at some overall trading opportunities and be able to go from there and make a decision on your own. So yesterday, ended up doing very well, ended up bringing in about $200 for its overall movement, left a lot of money on the table, but I left a lot of money on the table because I had to deal with my kids. So it's fine that we left money on the table, but it's good to be able to argue about being able to leave money on the table when it comes down to overall trading. So we are live on Instagram, we are live on Facebook, we're live on YouTube. Hope everybody's doing very well. Let's go ahead and take a look at the overall charts and see what's happening and see if there's any type of opportunity. Now, I'm upset at myself about one thing, and hopefully the market and people can be able to bring me back on this one. We'll go ahead and get started with it. We'll talk about that first. We'll look at what's going on with the economic calendar. Remember, we talked about interest rate decisions that was going to end up happening a little bit later on, throughout the night for the Australian dollar. Well, what ended up happening was that they ended up not changing the overall rate, but the trade balance was a little bit off. The trade balance being off allowed the market to be able to be in a negative position. Typically, when you end up having any type of interest rate decision, especially if they already tell you that they're not going to change the rates, then sometimes that's typically a slight little boost of the overall move. And then after that, you should see an actual retracement. Well, we did get that. The market ended up breaking up to 72 on the Australian dollar. And then after that, subsequently has dropped down almost 40 pips from that overall move. We've been talking about that we wanted to get into a sale right around 72. But I set up my alarms based off of a daily alert, not based off of a 2-hour alert. So missed out on the swing. Hopefully we can be able to get in on that overall pair. Between all of the pairs, I like that pair more than any other pair for us being able to get in. But we'll talk about that a little bit later on. We're going to take a little bit later on today. We're going to end up having President Lagarde speak from the central bank of the Eurozone. And then after that, Jerome Powell is going to end up speaking at 9:40, talking about what's going on with the US dollar. Remember, when Jerome Powell talks, the market moves. All right, when Jerome Powell talks, the market moves. Today is more of a fundamentals day. So once again, the information that has been brought out by them is going to end up being very important. And we'll go from there. We'll start off with the Australian dollar, United States dollar first after we get done with the big three. But if you are here live, please make sure that you drop in a comment. Make sure that you end up saying, hey, make sure that you end up subscribing so I can be able to see exactly who you are. Obviously, we do this each and every day at 7 a.m. to 7:30. And then after that, we end up doing recaps and videos and stuff like that a little bit later on throughout the overall day. If you're part of the boot camp class, obviously, you end up getting the cheat sheets and everything else like that to go with the master class. And if you want to be a part of it, all you have to do is go to cartercalcapital.com/start here and be able to hop into one of our free webinars and be able to go from there. So without further ado, let's take a look at it. So US dollar index, if we look at this overall move, currently we have a start of a break bullish when it comes down to this overall pair. This is exactly what we wanted when it comes down to being able to see this market move. As long as this market closes above the overall counter trend line break, and that means that going into tomorrow, we can be able to look for a slight retrace of an overall move or a slight retest of the overall move. And then after that, look to be able to buy long term. So I think the initial move, and I think the reason why the market is actually moving like this, if you look at the Australian dollar, a few other pairs are actually starting to take a little bit of a place of a move right here. But this market has to close above when it comes down to being able to get into this trade and feel very comfortable. Now, at this point, if we end up getting into the overall market, and let's say that the market rejects on all of the pairs and pushes back down, then that means that we got caught in basically a bull trap. So it's very important to be able to allow the market to be able to get to the point to where it can break out, and then after that, look for a retest and look for the overall chance to be able to get into the market once that happens. So the market is right now at a point to where I'm going to say if it stays above, then it will be considered to be bullish. However, if it does not stay above after 5 p.m. today, then that means that the market is still considered bearish. Now it's in the buy zone. This is what we've been waiting on since last week. So we have to keep our eyes out on every pair now. Every pair now is at a position to where we should be looking for overall buying opportunity. Henry, what's going on? We should be looking up for a buying opportunity to be able to get into the market. So keep that in mind. I'm going to say US dollar is considered to be right now overall bullish. We're hoping to be able to say that by the end of today. All right, now taking a look at what's going on with oil. We look at what happened with oil. Oil ended up shooting up yesterday from $37 all the way up to $39. So you should see oil and see gas prices go a little bit higher when it comes down to overall pricing at this particular point. But basically, we're in a no trade zone at this right now, and we see that the market is hitting a previous area where we found a little bit of resistance right around 36.74. So we have to be able to pay attention to that overall spot. Until the market ends up making a move towards that overall area, this is in a no trade zone, so there's no movement on this one. So you look at a pair like the US Canadian dollar, we may think that we have a trade to be able to take, but if I'm looking at oil, remember oil is a huge complementary pair to the Canadian dollar. I wouldn't necessarily say that we're ready to trade on the US Canadian dollar at this particular point and feel very comfortable with it. All right, so oil is not in a position to be able to buy, not in a position to be able to sell on the US Canadian dollar, so we have to keep that in mind. All right, looking at gold, we end up paying attention to what's happening with gold. We see that the market has gotten into close to the sell zone. Once it ends up getting into the sell zone, then we'll actually be looking to be able to sell to the downside. We do not have a counter trend line break towards this overall area as of yet. We can heighten up just a little bit when it comes down to this overall move, but we had a breakout. Now we're looking for the retest. Right now we're in that retest phase. We need to see this market basically break a counter trend line break to the downside in the sell zone, and then after that we'll feel comfortable with being able to sell that down to 1731 for that overall movement. Hopefully that makes sense for everyone. All right, now going into the NASDAQ 100, being able to take a look at this overall pair. This is where we end up making our money at yesterday. Remember, we ended up saying that we wanted a retest of this overall move. And once we end up getting a retest of this overall move on a 15-minute chart, we end up looking for a overall trade to the upside. Well, we end up getting that move, I want to say probably about, right about an hour after we end up having a session. So if you end up paying attention to what we end up saying, you got the counter trend line break right here. The market ripped up to the overall D extension at 11,467. I was able to trade to this overall consolidated area, and then after that took my eyes out. I took my eyes off of it a little bit, but was able to get back into it a little bit more towards this overall D extension. So the first portion of what we end up saying has been complete. If you end up making money off of that move, congratulations. That means that you end up having a green day for yourself. Now, what are we looking at right now? We're expecting for the market to be able to sell off. Now, earlier when I was looking at this overall move, we were looking for the market to be able to give us basically a 2-hour high and be able to break down towards the downside. Now, we didn't get that because the market broke above the overall movement at that particular point. I'm still interested in being able to sell, but because the market ended up breaking a 2-hour A for this overall move, now we have to consider that this market could possibly be bullish and being able to go from there. But overall, if we're looking at this long-term daily fib movement that is right here in this overall area, the market is still considered to be at a 618, and it still could necessarily fall down to 11,139 and could fall down to the overall weekly position at 10,236. But I can see that we're basically falling inside of a overall channel to the upside right now. And hypothetically, if the market ends up breaking its overall trend line to the upside and starts pushing bullish past 11,467, then we have to take that in consideration. We have to treat that as a bullish move that could basically go up to right around the 11,582 area. So what's the overall trading plan on this one? What would we necessarily say for us being able to do? Well, currently right now, if we look at the market from a daily position, we see that this market is still in a ABCD swing. This market has created a bearish crown, but it has not created a turnaround area at this particular point. So until the market ends up getting into the sell zone, this market is still considered to be bullish. Now, we end up having a breakout of this overall trend line. Let me erase this. We end up having a breakout of this overall trend line right here. And I'm getting ready to show it in a solid line so you can be able to see it. Market end up breaking down with this candlestick right here in this overall area. Since then, remember, once you end up having a breakout, you always have a retest. The market ends up retesting, and it's retesting this overall candlestick high. If the market does not go above 11,600, then the market is still considered to be bearish. If it does break above 11,600, then the market is going to consider to be bullish. And then after that, we should start being able to look at the continuous up fibs, where the market could be able to get all the way up to the 14,696 area. Or if you go to the 2-hour chart, being able to see it basically end up hitting the top of that overall consolidated area for the channel right around the 11,716 for a move. So we have a couple options. That means that you need to be a little bit patient when it comes down to being able to make this trade. You want to see if this market is going to break to the upside, then I will look for a counter trend line break on the 2-hour. I will wait for the market to get into the 2-hour fibs or into a 2-hour low price first before making a trade if you're looking at buying. If you're looking at selling, you have to wait for a counter trend line break, and I would wait until the market gets into the sell zone. And the market is not in the sell zone at this particular point to be able to make any type of trade. So right now, I am out of this overall pair. I am not interested in being able to make a decision for myself until the market makes a decision for me. I'm going to react instead of basically pushing and try to make a decision without necessarily having all of the information that's presented in front of me. All right, so with that being said, let's go ahead and take a look at the US versus the Australian dollar. Remember, I said that I wanted to get into this pair anything above 72. And sometimes when you're being very patient on an overall move and you basically are, and you go based off of a certain set of rules, then when you get into trading, you have to understand that the reason why you take trades and the reason why you don't take trades is based off of your overall rules that are set up. So when I look at trading, I look at reasoning as a very huge percentage of why you should focus on not taking trades and compared to when you should. So with that being said, we can see that this market has been pushing up bullish. We've been talking about this overall move through a transition trade all the way down to 68.85, going down to 66.50, and actually even lower than that if we talk about the weekly fibs. So we want to get into this at a high price. Currently, the market is not in the sell zone as of yet. It's very close, but it's not in the sell zone as of yet. We have a counter trend line break when it comes down to this move right now as we speak. Now, kind of like what I just talked about a little bit earlier, you have a breakout right now. Don't chase the market when it comes down to this overall move unless you can be able to catch it at the high. Well, going to the 2-hour fibs, the 2-hour fibs on the A end up getting broken. So we have the breakout right now at this particular point. All right. If this market remains to be right here at this particular point and stays below this overall trend line throughout this day, then it's okay to be able to start looking at sell trades and feel very comfortable. Now, the market did not get up to the 618, did not push up to that level, so it's still considered to be a R6 trade. Because it's considered to be a R6 trade, I cannot look at any type of trade until it breaks the counter trend line break, which means that we're giving up winnings to be able to be very comfortable in getting into this trade and allowing the market to be able to move quickly, right? Hopefully everybody understands that. Yes, I would love to be able to get it at 7,200. I was paying attention at being able to get it at 7,200. And if I would have got in at the right point, and maybe I would have caught it at the right entry, then I would have got in right doing the breakout and then doing the retest. I could have added on to the trade. That did not happen. All right, we can't cry over spoiled milk at this point in time. So now, when we look at this from a 2-hour break, we had this huge move that ended up pushing up, and this is when economic news ended up happening. The reason why I didn't get into the trade earlier, because I had an opportunity and I seen the market basically break down to right around this spot right here, which was at 71.70. The reason why I did not get into the trade at that particular point was because the market ended up breaking past the A. Because the market broke past the A, you don't have a fib to be able to work off of. If you don't have a fib to be able to work off of, then that means that you're putting yourself into a bad position if you try to jump into the market very quickly. So this is what this is a teaching tool right here, so you can be able to truly understand. You have a breakout right now. This is your overall move for a breakout, and this is a clear breakout of a overall move to the upside. I mean, to the downside. Do not chase the market when the market ends up getting to a point to where it has a huge fib for the movement. This was 38 pips of an overall movement to the downside. There's nothing you can be able to do about it if you didn't see it or you didn't catch it early. Because we didn't catch it early, now we have to be able to say we have to get a little bit of help from everyone else. People will look at this and see that the stochastic is at 33%, and they will say, okay, well, the market is market is a little bit oversold at this particular point. Can I get myself a high price? Once we end up getting a fractal low, which means that you have two candlesticks to the left and two candlesticks to the right that are basically higher than it, then you can start looking at being able to find a potential trading position. Now, we can use a couple things based off of that. We can use volume profile, we can use Fibonacci's, we can use a few other things when it comes down to that. Currently, right now, what I'm looking for is this. We have to be able to get a fractal low first. I got a pending sale at 71.83, and I'll tell you why I have a pending sale at 71.83 in a quick second. But let's say if this market remains to be able to push up a little bit higher as the day goes by, and it gives us a high price in the sell zone. If we get a high price in the sell zone, then that means that we can use our fibs and be able to go to the high of this move, go to the low of this move, be able to see what's actually happening, see this market basically end up retracing. And if you look at it, the 618 is right by that area where I had that pending sale at this particular point. I would love for this market to be able to push up closer to the 7,200 area. If this does happen, then it will give us an opportunity plus a fib to be able to trade with. Once you end up getting this overall position, this will be the trade that you will look at in trading, obviously for I think a couple weeks and being able to go into it, and possibly even more than that, because I think this will be the last breakdown of this overall move. This will be the second move of this overall fib to the downside, and then after that you can start feeling very comfortable with the market moving down at least to 66.50. Okay, so once again, there's no reason to chase the market. The market should come back. Well, it should come back. Now, if it doesn't come back, then we find another pair. But if it does come back, then we should be able to find a position right around this 618 area and then be able to go from there. Now, let me explain why I said 618. If we look at this overall move and we start talking about point of control, and let's go, this is the Australian dollar, United States dollar. And if you don't know what point of control is, once again, please hop inside of one of our Fibonacci fundamentals boot camp classes or our free webinars, so to where you can be able to get that information. Currently, right now, what I'm looking at is that I can see that this market is moving up. We can see that most of the price action that has been happening around this area has been in three separate areas. It has been right here, right around the 71.63 area. So if it breaks below 73, it might end up hovering right around the 71.63 area. Or we keep on going back and we keep on looking at the price. If it does push past the 71.63 area, then it should continue to go up towards the 71.86 area for us being able to get in. All right, so we have two positions to be able to pay attention to. We got one that's about 10 pips away, and it's 7 o'clock in the morning. So I'm going to bank on the market basically pushing a little bit higher. If it does push a little bit higher and it gives us an opportunity to be able to sail down right around the 71.86 to the 72 area, then I'll take that trade all day long, knowing that I can be able to have a tight stop and I can be able to average on more onto the trade. So if we get the position, then we trade it. If we don't get the position, then we move on and we find another pair. But we know what our overall game plan is. All right, so hopefully you like that breakdown. I'm going to go and talk about some other pairs real quick and start kind of moving on with that and kind of make it a little bit faster. So New Zealand dollar, United States dollar, if we look at this overall move, we can see, that's the wrong chart. I'll go to a different one. All right, New Zealand dollar, United States dollar is still at a point to where we're looking at being able to transition on this trade. We go to the daily. We can see that the market is getting closer to the sell zone. We had that breakout. Now we're at the retest area. We can see that this market is giving us slight consolidation for this overall movement. And I would love to be able to get it right around the 6,700 area, which is about 60 pips away. But that means that the market has to push bullish. And currently right now, we're basically at that same R6 area where the market basically ended up moving a little bit earlier. Now, keep this in mind. The Australian dollar and the New Zealand dollar are very comparable to the way that they end up moving. Now, the New Zealand dollar seems like it's stronger at this particular point than the Australian dollar right now at this particular case, but we do have to pay attention to this overall move. So the daily has not broken a trend line yet. With the daily not breaking a trend line yet, there's no trade to be able to take to the downside. However, if we take a look at the 2 hour, we can kind of get an idea about what actually ended up happening for this move. There was a false break to the downside. I got in on this trade based off of this false break. I seen that I caught it right at the low, and I got out very quickly. Sometimes you have to learn that if you end up getting into a trade, there's no continuation for this overall move, then you have to be able to get out, because this is basically called a bull trap. So I took a little bit of a quick little loss. I think it was like $36 for the loss, but I would rather have a $36 loss than a $100 loss, being able to see that the market continues to move bullish. Now, we can see that this market keeps on hitting off of this overall trend line to the upside. With this market keep on hitting on the trend line to the upside, it may end up getting up to that. It may end up possibly getting up to that 6,700 area. If it's about 40 or something pips away and it starts to push up right there, I will look at being able to take the sale at this particular point if that does happen. If it doesn't happen, I would look at placing in the pending sale if that does happen. If anything serves us right when it comes down to the Australian dollar, we've seen that the market end up breaking the 2 hour high, and then after that pushing down. If that's going to end up being the play of the week, then that means that if we get above 6,700, right, we could be able to take that sale, and then after that look for the market to be able to break down, and it'll basically be like the same move that happened with the Australian dollar earlier this morning. Okay, so that's where we are on this pair. No trade as of yet, but I am very interested in being able to take a look at it. Let's take a look at the U.S. Swiss franc for the overall move. U.S. Swiss franc, I actually ended up taking a small little loss on that one as well. Once again, seen a little breakout of an overall move. I seen that the market was basically at a 2 hour position. I tried to get out, looking at being able to get in right around the 91.50 area. Currently, the market is at 91.45. This market is in a buy zone, but it does not have a counter trend line break to the overall top side yet. So once again, we see that the US dollar is getting stronger, but we don't want to chase the market yet, because there is a chance that the market could push to the downside. With that being said, until we end up getting confirmation, you should be able to say that the market is still considered to be bearish. Once we end up getting confirmation of the market end up pushing up with a candlestick above it, just like what we've seen with the US dollar index, then after that, we can be able to take a trade. All right, the same thing that happened with the Australian dollar. You have a break and you have a confirmed break. It has to remain to be the same all day. If that happens, then you have the trade. If it doesn't, then quite frankly, you're getting caught up in your money's being tied up to a trade that could be a low probability trade at this particular point, right? So what am I looking for? We go to the 2 hour. Kind of the same thing with every other pair. We'll see that this market has bounced off this trend line a couple times. It has broken a overall trend line to the upside and created a fractal low, but it still has not broken to the downside. I believe that if we're looking at this overall move, we can go based off of past resistance equals future support. We can see that 91.30 is one of those areas where the market could fall down to and possibly be able to trade at. So I am interested in being able to buy right around the 91.30 area if it does give me a price right around that overall area and be able to drop down from there. Now, once again, why do I think that the market is going to drop down to 91.30? Well, we go back to being able to figure out what's going on with point of control. Take a look at this. We take a look at this overall market. We see the market basically in a position to where that's New Zealand dollar, United States dollar. We see this market basically end up breaking down in this overall area. I just want to focus in on the 2 hour, and I want to show you something. We can see that, quite frankly, with past performance of overall trades and everything else like that, we see that currently we're right here at this particular point. I'm going to put a horizontal line here. We're right here at this particular point where we're at the last little area of overall buyers that have gotten to the market and look to be able to trade at this particular point, right? So what that means is this: if the market doesn't support this overall area right here, then the market more than likely will end up falling. So instead of trying to buy at 91.50 and not feeling and the market ends up falling from here, let's look at being able to buy when the market ends up going into this overall pocket area. If we can be able to buy when the market is in this pocket area and breaks down and gives us a lower price, then obviously we can average more in. And then after that, we can look for a counter trend line break and be able to go from there. Now, once again, we look at what happened with the Australian dollar. We use that as context clues on what ended up happening. The 2 hour ended up getting broken. We look at this overall move. The 2 hour, if it does break down, will go below 96.36, which means that the A will end up being broken, right? And then after that, we've seen a upside move towards the overall position. So we might end up being able to get it at 93. We might end up being able to get it at 9100, right? But the only way that we can be able to know that is by not having our money in the market and allowing the market to be able to prove to us that it's ready to go, right? As long as the market stays below this overall trend line, then the market is still considered to be bearish. And until then, you should not have your money inside of the market, right? Took a small little loss on this one. Once again, that's fine, but I took a small little loss because I ended up noticing that this market wasn't ready to go when I ended up taking the trade. So it's my fault that I ended up hitting the buy trade, but at the same time, it's a quick little reminder that, okay, well, we don't have confirmation. Let's be able to wait until a better price to be able to get in. Euro versus the United States dollar. Let's take a look at another trade on that one and see what we have for us being able to get in. Well, let's go US CAD real quick. US CAD, same deal. Market is in a retest area. Market is close to the 5-0. Market is not in the buy zone. Market is very close to a point of control, right around 1.3182. We're looking at being able to get in at a very low price and then watch the market end up breaking the trend line to the top side. Once that happens, and obviously we'll be going after 136 for the overall move if it keeps on going from that area. So I am interested in being able to trade it to the 136 area. All I'm doing is just waiting for a counter trend line break to be able to get in and a retest to be able to get in to be able to confirm the move. That makes it easier for us to be able to get in the trade and stay away from the computer and allow the market to be able to move, right? Profits are made when you're being patient, right? And allow the market to be able to go from there. So you can't chase the market and expect to feel very comfortable when you're looking at the charts and see that you're already down when you end up taking a trade. So give yourself a little bit of time, and then after that, you can be able to make a move from there. So we're looking for the same move on this one, just like we're looking at the same move on every one of them. We're looking for a break, retest, then go. We get that, then we're good to go. Okay. I'm pretty sure I can say the same thing about the Euro United States dollar as well. Let's see, Euro United States dollar. Currently, the market is still pushing towards 1.18. The Eurozone ended up having some news about some digital currency that they was actually creating at this particular point in time. We have a lot of convergence with the market basically pushing up and giving us a high price. Once it gets into the sell zone, we should see right now, if this market remains to be the same and this market stays at a spinning top today, we may end up getting a counter trend line break to the downside, creating a evening star. Then after that, you can be able to trade from there. Until then, no trade to be able to take at this particular point. Let's talk about the trade that we are in right now, that we end up getting in with, which is the US yen. US yen, remember, a couple weeks ago, this was the only pair that was strong against the dollar when the dollar actually ended up making its move in the transition trade to the overall upside. We have a long-term crown that is expected to go down to 99.20 when it comes down to this overall move. And since then, the market has been moving from 112 all the way down to 105 at this particular point. Currently, the market is going through a medium swing right here at this particular point, where the market high was at 107. The market is expected to go down to 101 for the overall spot. That's where the extension is currently at this particular move. If we look at a sub swing based off of this triangle that was broken, and this is more of a 2-hour move, we can see that this market is pushing up at this particular point, in which I don't like that, but it is pushing up. And there's a point of control at 106. We talked about that a little bit earlier for it being able to get in, but we end up getting a counter trend line break to the downside. And subsequently, the day after we end up taking this move, we end up getting a high price. So I don't like what I see right here, but I am into a position to where I feel very comfortable with the overall move. The market ends up going up to 106, then I may end up considering taking a trade. If it doesn't, then I just take a small loss, and then after that, I will look at this as a consolidated trade, meaning that we had resistance, we had support, We had resistance. We had resistance again. We hit support. And then I would want to be able to buy it at 107. I mean, want to be able to sell it at 107 if that does happen. All right. So we have a couple options on this particular position. That's why you that's why you do a smaller percentage on certain trades to where you can be able to make a better decision off of the trade. Currently, right now, we are in this market. We're only down 8 pips at this particular point. If this market does push up past the 106 area and just rips up there, then that means that, quite frankly, we shouldn't have been in this trade in the first place. Take a small loss, and then after that, I will look at being able to get in at a better price. Now, with that being said, if you like what we end up doing, please make sure that you like the Carter Capital business page. Please make sure that you go to Trade with Travis and subscribe, and be able to write a comment if you end up liking that. Send a video over to somebody else that you think that would actually be able to want to be able to learn it and be able to go from there. And like always, believe in yourself, change will end up coming, and plan your trade your plan. I'll see each and every one of y'all